The US and China, two economic titans. Their relationship is deeply intertwined. It shapes the global landscape, yet this partnership is fraught with tension. A trade war simmers, threatening to boil over. This conflict has global implications. It impacts businesses, consumers, and entire economies. The US and China are the world's two largest economies. They are deeply integrated through trade and investment. This interdependence makes their rivalry even more significant. The stakes are high. The outcome will reshape the global economic order. Understanding this conflict requires historical context. We must examine the industrial journeys of both nations. We must delve into the motivations behind the trade war. And we must consider the potential consequences for the global economy. The US-China trade war is not just about tariffs. It is a symptom of a deeper struggle. A struggle for economic dominance. A struggle for technological supremacy. A struggle for global influence. The US rose to prominence in the 19th century. The Industrial Revolution propelled its growth. It became a manufacturing powerhouse. Its economy thrived on innovation and mass production. The US became a symbol of industrial might. Its influence spread across the globe. China's journey was different. It remained largely agrarian for centuries. Then in 1978 came a turning point. Deng Xiaoping initiated economic reforms. These reforms opened up the Chinese economy. They unleashed a wave of industrialization. China transformed itself into a manufacturing giant. It became the world's factory. Cheap labor and government support fueled its rise. China's economic miracle lifted millions out of poverty. It reshaped global trade patterns. The two nations' industrial journeys intersected. The US became a major consumer of Chinese goods. China became a crucial supplier to the US market. This interdependence fostered economic growth, but it also created vulnerabilities. As China's economic might grew, so did its ambitions. It sought to move up the value chain. It aimed to become a leader in technology and innovation. This ambition brought it into direct competition with the US. The year 2018 marked a turning point in US-China relations. The Trump administration fired the opening salvo in what would become a full-blown trade war. Tariffs were imposed on billions of dollars worth of Chinese goods. This aggressive move sent shockwaves through the global economy. The Trump administration cited several reasons for the tariffs. One key concern was the trade imbalance between the two countries. The US had a large trade deficit with China. This meant it imported far more from China than it exported. This imbalance, the administration argued, was unsustainable and unfair. Another major point of contention was intellectual property theft. The US accused China of stealing American technology and trade secrets. This theft, they argued, gave Chinese companies an unfair advantage. It undermined American innovation. These accusations were not new. However, the Trump administration's approach was a significant departure from previous administrations. It signaled a more confrontational stance towards China. It marked the beginning of a new era of strategic competition. The tariffs were met with immediate retaliation from China. Beijing imposed its own tariffs on American goods. The tit-for-tat escalation continued, with both sides raising tariffs and expanding the list of targeted products. The trade war was on. The trade war between the US and China has had far-reaching consequences. It has disrupted global supply chains. Businesses have had to scramble to adjust. The tariffs have increased costs for consumers and businesses alike. They have fueled inflation. They have dampened economic growth. The trade war has also created uncertainty in the global markets. Businesses are hesitant to invest. Consumers are holding back on spending. This uncertainty has weighed on global economic growth. It has increased the risk of a recession. Other nations have not escaped the fallout. The trade war has disrupted global trade patterns. It has forced countries to reevaluate their economic relationships. Some nations have been caught in the crossfire. They have faced pressure to choose sides. Some countries have sought to capitalize on the US-China trade tensions. They have positioned themselves as alternative manufacturing hubs. They have sought to attract investment and boost their own exports. However, the overall impact of the trade war has been negative. The trade war has highlighted the interconnectedness of the global economy. It has shown how actions taken by two countries can have ripple effects across the globe. The trade war has also underscored the importance of international cooperation. It has shown the dangers of protectionism. The spring of 2025 has brought a chill to the global markets. The US-China trade war has flared up with renewed intensity. The latest tariff increases have sent shockwaves through the global economy. President Trump raised tariffs on Chinese goods to 145%. China's response was swift, raising tariffs on all US goods to 125%. The markets reacted with alarm. The S&P 500 plunged 3.5%. Gold surged to a record high. Section 6. Navigating the labyrinth, potential paths forward. The path forward for the United States and China remains unclear. The two economic giants are locked in a high-stakes game of chicken. Neither side seems willing to back down. The potential consequences of a prolonged trade war are significant. One possible scenario is a negotiated settlement. China has indicated that it is open to talks, but not under duress. President Trump has said he is awaiting a call from Xi Jinping. However, the recent escalation of tariffs has made finding common ground even more challenging. Another possibility is that the trade war continues to escalate. This could lead to further economic damage. It could also spill over into other areas of disagreement such as technology and security. This scenario would have profound implications for the global order. Some analysts believe that the United States holds the stronger hand in the trade war. They argue that China is more reliant on exports to the United States. However, others point out that China has more tools at its disposal to retaliate. They argue that the United States economy is not immune to the negative effects of a trade war. The outcome of the trade war will depend on a number of factors. These include the willingness of both sides to compromise. They also include the domestic political situation in both countries. The global economy will be watching closely. The stakes are too high to ignore. Section 7. The High Price of Discord, a warning from Jamie Dimon. Jamie Dimon, the CEO of JP Morgan Chase, has issued a stark warning about the United States-China trade war. He believes that the negative effects of the tariffs will worsen over time. He argues that they will be difficult to reverse. Dimon's warning carries weight. He is a respected voice in the business community. He has a deep understanding of global economics. Dimon points out that the tariffs are already having a negative impact on businesses and consumers. They are increasing costs. They are disrupting supply chains. They are creating uncertainty. He warns that these effects will only intensify if the trade war continues. Dimon is also concerned about the long-term implications of the trade war. He believes that it could lead to a decoupling of the United States and Chinese economies. This would have significant consequences for global growth and stability. Dimon's warning should be heeded by policymakers in both the United States and China. The trade war is a dangerous game. It is time for both sides to come to the negotiating table. It is time to find a way to resolve their differences peacefully and constructively. The alternative is a prolonged conflict that would damage both economies. It would undermine the global trading system. It would increase geopolitical tensions. The stakes are too high to ignore Dimon's warning. The time for action is now. Section 8. Beyond the Balance Sheet, Geopolitics and the Future of Trade. The United States-China trade war is about more than just economics. It is a manifestation of a deeper geopolitical rivalry. The two countries have different visions for the future of the global order. Their competition is playing out on multiple fronts, from trade to technology to security. The United States has long been the dominant power in the world. However, China's rise is challenging that dominance. China is seeking to expand its influence. It is asserting itself on the world stage. This has led to increased tensions with the United States. The trade war is one way in which the United States is trying to counter China's rise. The tariffs are designed to protect American jobs. They are also intended to slow down China's economic growth. However, it is unclear whether these measures will be successful. The trade war is also having a profound impact on the global trading system. The World Trade Organization, or WTO, is under strain. The rules-based order that has governed global trade for decades is being challenged. The future of global trade is uncertain. The outcome of the United States-China rivalry will have a major impact. If the two countries are unable to find a way to coexist peacefully, the world could be headed for a new era of protectionism and conflict. Section 9. Charting a course. The need for strategy and cooperation. The United States-China trade war is a complex and challenging issue. There are no easy solutions. However, one thing is clear. Strategic economic policies and international cooperation are essential. The The United States needs to develop a clear and coherent strategy for dealing with China. This strategy should be based on a realistic assessment of China's strengths and weaknesses. It should also take into account the interests of United States allies and partners. China also needs to adjust its approach. It needs to address the concerns of the United States and other countries about its trade practices. It needs to be more transparent and open. It needs to play a more constructive role in the global trading system. International cooperation is also essential. The WTO needs to be reformed and strengthened. Countries need to work together to address the challenges posed by China's rise. Unilateral action is unlikely to be successful. It will only lead to further division and conflict. The United States-China trade war is a wake-up call. It is a reminder that the global economy is interconnected. It is a reminder that we are all in this together. Now is the time for leadership. Now is the time for cooperation. The future of the global economy depends on it.